Hi, Warren, how are you?
What brings you to Omaha?
I'm just in town, kind of passing through, thought I'd stop by. He thinks inflation is transitory. Do you think inflation is transitory?
I can't reconcile a 5% budget deficit in a world of low unemployment, low interest rates, negative interest rates in many countries. No economics textbook I know that was written in the first couple thousand years discussed even the possibility that you could have this sort of a situation continue and have all the variables stay more or less the same. So I think it'll change.
If we think a business is attractive, it would be very foolish for us to not take action on that because we thought something about what the market was going to do or anything of that sort, and to give up something that you do know and that is profitable for something that you don't know and won't know because of that, it just doesn't make any sense to us, and it doesn't really make any difference to us. I mean, I bought my first stock, I think, in probably April of 1942 when I was 11. Since then, I mean, actually World War II didn't look so good at that time. I mean, the prospects, they really didn't. I mean, we were not doing well in the Pacific, and I'm not sure I calculated that into my purchase of my 3 shares.
Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Warren Buffett explains how you should invest in 2024. Buffett's 7 not-so-secret weapons. As I'm sure you are all aware, there is Mr. Warren Buffett, the 93-year-old Oracle of Omaha. He is the CEO of Berkshire Hathaway and the world's best investor. Every year he releases a letter to his shareholders where he details the returns of Berkshire Hathaway stock since he took the reins back in 1965. Get this, from then to now, he's averaged 19% per year, while the S&P 500, or the market, has only averaged 10.2%. What's Buffett's not-so-secret weapons? So in this video, we're going to take the time to hear 7 of Warren Buffett's advice. That specifically applies to the investing scenario that we all face coming into 2024. So what is that situation? Well, firstly, the market is rallying. It puts out a gain of 7% year to date. Berkshire Hathaway A-share has reached $628,930 per share, with a year-to-date gain of around 17%. Talk about a crazy bull market we are in. Who can afford to buy just 10 shares of Warren Buffett's A-share in America today? In fact, when you only buy the best company in the world, like Nvidia, you have a better shot at making it in this world. If you haven't seen my last video about playing Nvidia, please check it out before watching this one, because I will show you my strategy in the after party of Buffett's advice. Warren Buffett has warned Berkshire Hathaway shareholders that his index-like $905 billion conglomerate has virtually no possibility of eye-popping performance in the years ahead. So what do we do as rational long-term value investors when the stock market is pretty solidly trending higher? Should we buy the dip as they go higher, or are we just sitting on the sideline and waiting for the AI boom to go bust? Let's hear Buffett's advice.
Or I started buying when the stock was maybe 100. I was buying it kind of as fast as I could, and then I ended up buying some as high, a whole lot higher. I won't name the exact price, but a whole lot higher. I'd rather have it go down. For one thing, if it goes down, Apple's going to buy a lot of stock back. They're already buying stock back. And if it goes down 10%, it means they get to buy 10% more shares, and my interest will go up 10% more for spending that money and buying shares. So I am benefited by going down. If I were to talk my book, I would talk it down.
There There remains only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and by others. It is a problem that Buffett has been staring down for almost a decade as the growth of Berkshire operations and cash levels have compounded. Berkshire's cash pile, which continues to climb, it hit a record of $167.6 billion at the end of 2023, up $39 billion over the course of the year. The first advice is to hold plenty of cash on hand, especially when the bull market is traded rich and going higher. That's when you need to take profit and sit tight. Buffett explains the size of Berkshire is close to $1 trillion, is working against him. Size did us in. Through increased competition for purchases was also a factor, Buffett said. For a while, we had an abundance of candidates to elevate. If I missed one, and I missed plenty, another always came along. Those days are long behind us. As individual investors, first of all, we should think like Buffett. The second advice from Buffett is to have an abundance mindset. There are always more opportunities or candidates in the market for us to evaluate because we are small fishes. We have more growth advantages. There are plenty of fishes in the sea. A small fish plus another small fish. That family size just grew by 100%. But if you are the biggest whale in the ocean, you can swallow a mouthful of fishes. You are still not going to get any bigger. That's Warren Buffett, the biggest whale in the stock market. His company is like an index with a box full of stocks. The third advice from Buffett is that it's good to just buy the SPY index fund or his BRKB stock for the long term. The 93-year-old Buffett, who lost his longtime business partner, Charlie Munger, the architect of Berkshire Hathaway, last year, Buffett said Berkshire should continue to do a bit better than the average U.S. company, and more importantly, should also operate with material less risk of permanent loss of capital. This is Buffett's fourth advice to investors, which is rule number 1, never lose money or take any risk of permanent loss of capital. In terms of my NVIDIA swing trade plan, what I did was I bought the stock at $690 a share to anticipate the most shocking earnings of the year, of course. I got lucky when the stock went higher 16% after the earnings. Right now the stock is traded above the 9-day EMA. So as long as the stock is traded above this trend line and 9-day EMA, I will keep riding it higher. If the stock crosses the 9-day EMA and breaks that trend line, I will sell my entire position and take profit. In this way, I would not have any risk of permanent loss of my capital. So I am following Buffett's advice. He added, anything beyond slightly better, though, is wishful thinking. This is because Buffett's anointed successor, Todd and Ted, they have a tough act to follow. Since 1964, Berkshire shares have returned 4.4 million%, far outstripping the 31,233% gain by the benchmark S&P 500. If you are thinking, oh, NVIDIA stock has returned 500% over the past year from the bottom, and 96,000% from January 1999. If the reason why you cannot buy NVIDIA is because it has performed so well in the past, then with the same logic, you can't buy Buffett's company either then. We know past results cannot predict future returns, but fantastic past results do build credibility and trust with investors. For the people that are investing into Palantir instead of NVIDIA, they are taking a bigger risk. I guess the fifth advantage from Buffett is that investing into the proven and trustworthy management team is important. We all know that Jeremy's tattooed chef went bankrupt. The major reason is that the CEO is taking 4 salaries from shareholders. That's the fatal management mistake you need to avoid. Thanks to the American tailwind and the power of compound interest, the arena in which we operate has been and will be rewarding if you make a couple of good decisions during a lifetime and avoid serious mistakes. Berkshire would continue to pounce on opportunities when they present themselves, as in early 2022 when it plowed more than $50 billion into stocks as the market sold off. So Buffett did take advantage of the 2022 inflation bear market and put his cash to work. Panics won't happen often, but they will happen, he said. The sixth advice from Buffett is that buy the panic. Buy good companies during the market extreme fear is a rock-solid way to create wealth for your family. Buffett has complained of stretch valuations as markets hit records. In those periods, Berkshire largely sat on its hands. Waiting is a part of the game. Charlie in 1965 promptly advised me, Warren, forget about ever buying another company like Berkshire. But now that you control Berkshire, add to it wonderful businesses purchased at fair prices and give up buying fair businesses at wonderful prices.
So by nature, if we want to own good businesses, we're going to own things that have relatively little capital employed compared to our purchase price. That would not have been Ben Graham's approach. Ben was not working with very large sums of money, and he would not have argued with this approach. He just would have said his was easier. Second principle is the margin of safety, which again gives you an enormous edge. And then the third is just looking at stocks as businesses, which gives you an entirely different view than most people that are in the market.
Munger was instrumental in shifting Buffett's investing approach, helping him to pivot away from a cigar butt investment style. The seventh advice from Buffett is to buy a wonderful company at a fair price over an average company at a cheap price. That's why NVIDIA is always a good example of a wonderful company, because it always finds a way to invest into the businesses for you instead of you trying to figure out where to invest your hard-earned money. NVIDIA knows AI is the future, and 10 years ago, it planted the seeds. Now it's the only company in town that is profit lucratively from their AI investment. It has a return on invested capital of over 50%. Palantir ROIC is below 3%, just FYI. The difference between a great CEO like Warren versus the worst one at Tattoo Chef is, as Buffett said, while we emphasize treating our employees, communities, and suppliers well, our allegiance will always be to our country and our shareholders. We never forget that. Though your money is mixed with ours, it does not belong to us. This is different from Baba. See, in Alibaba, they put their shareholder in the third place. Alibaba has publicly stated that it puts customers first, employees second, and shareholders third. What do you think about that? Let me know in the comments section below. Since you are still here, a bonus for you, Buffett's final warning. Occasionally, markets and the economy will cause stocks and bonds and fundamentally good businesses to be strikingly mispriced. Indeed, markets can and will unpredictably seize up or even vanish, as they did for 4 months in 1914 and for a few days in 2001. If you believe that American investors are now more stable than in the past, think back to September 2008. Speed of communication and the wonders of technology facilitate instant worldwide paralysis, and we have come a long way since smoke signals. Such as instant panics won't happen often, but they will happen, so be ready.